Welcome back, and joining me for a look at the day's markets action is Muhammed Wagley from Sasfin Wealth. Thank you so much for your time, Muhammed. Quite a sour picture that we're seeing there across the board in the markets. Are the markets in a state of waiting for the next catalyst?
Hey, Zanati. Yeah, so you know what? I think it absolutely feels that way. We're seeing a little bit of, let's call it negative sentiment both yesterday and today. But I will note that, we did see a little bit of a recovery towards the end of the day. And I think that maybe reinforced that notion. One of the sectors that did perhaps turn towards the green towards the end of the day was gold. And I think that was really just because of the risk off sentiment that we're seeing. If you look around, there's quite a few reasons why the market could be nervous. There's obviously what's going on in the Middle East. There's, I suppose, concerns over the subsequent rate cuts coming in. And I think perhaps the market's just a little bit nervous about that while we're waiting for sort of further economic data coming out. I think you mentioned it a little bit earlier. From a local perspective, we've got the inflation print coming out tomorrow. So perhaps we'll get a bit more clarity and hopefully some reassurance in the near future.
Yeah, well, I mean, just on gold, you mentioned gold there, that it also ticked up, and it's actually in the resources 10 complex being the sector that's been pulling up that index. And I've been seeing a lot of institutional investors actually upgrading, I guess, their forecast for gold. What do you make of, this kind of new bullish era that gold is entering?
No, it's quite interesting, breaking sort of 2,700. I think that was on Friday. We've hit a new all-time high, and everybody is sort of exceptionally bullish subsequent to that, which is quite interesting. But if, again, sort of coming back to what I said earlier, there's a lot of things that the markets could be sort of nervous about leading in towards the end of the year. And one of those things that I didn't mention is the potential outcome from the US election, that we're expecting to see in November. In addition to that, there's the whole sort of narrative around the interest rate cuts and the inflation story. And, it's not inconceivable to me that we could see, quite a bit more movement, I suppose, before the end of the year, at least in the short term, is looking a little bit attractive.
Well, talking about inflation, let's go into Sasol, of course, housing oil there that does contribute a lot to inflation. They released their 3-month production update today, talking about a volatile oil pricing environment, but also still pressure on chemical prices, their lower margins as well. They do say, though, that they continue with self-help measures. But I mean, just looking at how the share price is continuing to trend down today, down at some point by over 5%. Do you think that this is just more evidence of loss of confidence in the stock?
No, it's an interesting one. They noted that they've maintained their guidance, but based on sort of my reading on the rest of the update, I just felt that it was relatively bleak, and perhaps that notion was a little bit optimistic. We're seeing Secunda operations expected to be coming down from the previous quarter. You mentioned Natref, another one of the crude oil refineries, also experiencing a downturn. Now, both of those had experienced shutdowns, and that has sort of played a part. But when you look at them sort of in conjunction with each other, they're expecting to see quite a substantial decrease in liquid fuel sale volumes. Yes, the chemical segment was, I'd say, a little bit more mixed, at least from the American perspective. There's some positivity, but lower volumes across Africa. So broadly speaking, it painted quite a bleak picture just in terms of, the company specific stuff. And then when you combine that with the volatile oil price, the stronger rand, it's a very tough environment they're operating in. And looks like it's going to take quite a bit, to get out of that. And, in the near term, it does seem fanciful. So quite a bit of work to be done there, before we can see a turnaround sort of being implemented. And I suppose a bit of more positivity around the share. Currently, they're about at 109 Rand per share. So almost a 5% loss on the day.
Yeah, we're talking about a fuel stock. Cars need fuel. So let's go into We Buy Cars, also releasing a trading update there for the year end, saying that they expect core earnings to rise as much as 26%. But quite a difference, because when you look at like the normal HEPS metric, that's expected to decrease. Not a lot of color in that update. What did you pick up there?
Yeah, so look, we'll get a bit more detail when the actual numbers do come out, but they did make mention that, a large part of that decline that they're going to see from a headline perspective is due to sort of one-off costs associated with the listing. And then they also mentioned that they had some call options which had given them a right to purchase sort of a large shareholding from one of the sort of shareholders, but then those call options were what they said was de-recognized, and I suppose that recognition or de-recognition has led to a loss on the balance sheet. So, these are sort of one-off costs. I wasn't necessarily sort of too alarmed when I did see that. It did sort of make sense. But, when you look at the actual core headline earnings, coming off sort of low basis. I think in the industry
Yeah.
that they operate in, the second-hand car market did have a tough 2023. It's been a tough economic environment with those high interest rates, and that's been affecting them. And it does make sense that we're starting to see a little bit more positivity there. So we see sort of when or where in that range of 21 to 26% the actual numbers will come out. But if I look at the performance of their share price since they listed, I think they've done about 70 odd percent. So this is a company that has been doing well, and it does seem like there was quite a substantial value unlock, which I think was the whole point of sort of the unbundling from Transaction Capital a little bit earlier on in the year. But I think to sum that up, I wasn't necessarily too concerned
Yeah.
by those one-off costs, which are sort of putting pressure on that headline earnings figure.
All right. Well, talking about value, where else are you seeing value today, Mohammed?
Well, that's quite an interesting one. I think often enough I come to you guys and I've always got a tech stock pick. So today I'm going
Yeah.
to go with something a little bit different. I'd have a look at Transdime Group. This is an aerospace company, and I'd say in a nutshell, very simply put, they sell pretty much everything from your light switches to your ignition systems that the aeroplanes would require. Now, these planes last around 30 odd years, so maintenance of the planes is relatively important and relatively lucrative. Now, Transdime operates, more or less a monopoly in that space. I wouldn't say that it's particularly in value territory, but we are seeing an uptick in travel. I'm really convinced of the story. I think the theme is very strong, and they're very sort of well positioned within their industry. So if you haven't sort of heard of or know anything about this share, I'd definitely look a bit further into Transdime.
All right. Well, thank you so much for your time and for giving us analysis on what has moved investors' money today, Mohammed. That was Muhammed Wagley from Sasfin Wealth.